wild week for the S&P 500. At first, the bulls had complete control. They rose the S&P 500. It looked like it was going to be a great week for the bulls, but they simply couldn't hold on. And so by Wednesday afternoon, the bears took over and they pulled the S&P 500 down 1.26% for the week. So the bears won the battle for this week. When we look at our longer term readings as far as where we are in the market as a bear or bull territory, it is in bearish territory right now. Now we wait until the end of the month before we take action on that, but if the end of the month closes where we are right now, then we will certainly take action to preserve capital. But what all this is telling us is to be very cautious in the market, adjust stops up, and when you're buying in on stuff to the upside, then we want to shrink down that position sizing and make sure that we have a really strong buy signal. So let's look at a chart of the S&P 500, and then we'll talk a little bit about the positions in the portfolio this week, the game plan going into this week. And here's a look at a chart of the S&P 500. Each one of these vertical bars represents 1 week of price action. So this is all of last week's price action. So here's the open right here. This is what I was referring to earlier. The bulls charged higher, couldn't hold on, and then the bears pulled it all the way down. They couldn't quite close it on the low for the week, but they certainly did create a follow-through bar to the downside. Now, arguably, we're still sitting on support from just as recently as October, and then of course at the beginning of the year as well. So it'll be interesting to see if the S&P 500 can in fact bounce here on support, or if we will see a break to the downside. Now I can't imagine that there are not a lot of stop losses in this area, so if it does break, we should see some pretty quick action to the downside. Don't know if that will be the case, but that wouldn't be surprising. When it comes to the positions in the portfolio, we've got a few different things going on. Number one, our longer term momentum plays, which is US growth and US large cap. Those are still in a buy signal. That we don't take action until the end of the month on those. And so right now we're going to hold tight on those. As far as our weekly swings, we've got US healthcare and then the US dollar and then also US technology. So the technology and healthcare don't look too good right now. Pretty close to getting stopped out. Don't know if we'll get stopped out, but we're right there. So we're going to watch those really, really closely this week. As far as the US dollar, looks good. Almost on highs, not quite, but almost on highs. And that's exactly the type of price action that we want to see. So we'll see if we can get some more upside this week and it can break out. But it would be picture perfect, of course, if the US dollar could do that. And then the final thing is the US preferreds. US preferreds have been beaten up pretty bad lately. It depends upon which ones you're looking at. They were up, they were mixed this week, but we're going to hold on to those. They produce some nice dividends for the accounts and for the portfolios, and so we're going to hold on to that. And that is about it. As far as new buy signals, there are none to get excited about. So we don't plan on adding anything to the portfolio this week. And we'll see if the bulls, in fact, do get a nice rise to the upside this week, then that will give us a nice buy signal and then possibly some chances to take action in the following week. So with that, have a great week, and we'll talk to you next time.